What's up everyone, this is Kenny here from Property Stories, a channel where we discuss everything about real estate to help you make an informed decision. Today I'm going to share with you a question that I got from the audience. The question sounds like this. Hi Kenny, sorry to kacau you. Need some advice urgently. A relative passed on suddenly but got bank loan with new house. He left behind a small baby and wife. Sorry to hear this. Just got new keys to the new house. Assuming they have shared name, husband and wife, will MRTA cover the whole house loan or only half? Okay, here's the situation. Both parties are in the loan. One party passed away. The husband in this case suddenly just passed on. So the question that the audience would like to know is whether the MRTA will cover half of the loan or full loan in this case. My answer is actually it depends. Do you know when you apply the MRTA, you actually can, if you have 2% in the loan, you can actually split the coverage, half, 70-30, whatever percentage, the banker can actually do that. So you have to refer back to the original application, whether got by MRTA or not, and then if got by, how much is the percentage, okay? So when you apply for a housing loan out there, remember, I give you an example. Let's just say a loan is 600,000. You and your wife apply. Wife, husband, wife. So you can be 300,000 coverage here, 300,000 coverage here. If let's just say both of you are working, then 300, both of you are contributing equally to the house, then 300. If it's a single income household, for example, only the husband is working, then it makes sense to cover the full amount on the husband, which is 600,000. Okay, 600,000 for however long the tenure is. Make sure the insurance amount can cover throughout the tenure of the loan. In the event the husband passes away or total permanent disability happens, then the housing loan is paid for because it's full coverage. So how to know whether you got full coverage or not? This, you have to get a quotation from the banker, because MRTA, remember, it reducing balance. So when it reduces the amount, you should be able to plot against your loan. 600,000 at the start, at the end is zero, right, if loan, but it will go down this way. As you pay the installment, amortization, it will happen. So your MRTA must roughly cover the amortization. Barring any spike crazy in interest rate, your loan is relatively follow the amortization curve, and the MRTA should be enough to cover that loan. Of course, you can never be too careful lah. Then I presume that this husband here will need to take also another life insurance plan. Do not neglect this, because MRTA doesn't cover critical illness. Okay, a lot of people, they assume that, for example, they get cancer, right? Then okay, they cannot pay the house loan also because they can claim from the MRTA. No, ladies and gentlemen, MRTA only for two things: death, total permanent disability. For critical illness, please get your own life insurance. Talk to your own insurance agent. Okay, how much you need. If you need to top up the coverage, which I suggest you do, top up also the coverage, because the life insurance will pay faster than MRTA. MRTA, remember, you are still owning the policy together with the bank. So in the event this situation were to happen, let's just say you face with a death, what the wife will need to do now, with her husband passed on, right, is to contact the bank. Not contact the insurance company, contact the bank, because the bank is also the master policy holder. The property is still charged to the bank and they are the master policy holder. So even if you contact the insurance company, also insurance company will tell you, okay, you need to contact the bank, and then the bank will check and will start the process to claim the insurance money. So ladies and gentlemen, it is very important. Each time when I see, back in banking days, when I talk about how much MRTA you want, you have that, then you will see some of the customers, right, the face are straight away from happy, straight away turn black. Hey, I don't want MRTA. You all bankers keep on forcing things down our throat. I already got my own policy. Why I need to buy and pay some more, pay interest? Ladies and gentlemen, this is the thing that you take for granted. True lah, when nothing happen, you will feel that it's very waste. It's the same with your life insurance policy. Okay? When something happen, then you realize, oh, why not I should have taken the insurance when I was healthy, or this MRTA I should have bought before these things happen. It's too late. It's too late. So whenever you start planning for your house purchase, don't forget to plan also for contingency, emergencies, such as whether when you're bedridden, let's just say you're sick, or let's just say you suddenly passed on. What will happen to your dependents, your wife, your kids? This one you need to think. Okay, I think I've said enough. I hope that this gives you some guide. If you know someone who is facing this same situation and needs to claim also the MRTA, pass this video to them, alright? I'll see you again in the next video. This is Kenny here from Property Stories. Bye bye.